Hey, this is Tim Sykes. It is February 11th, 2016, and guess what? The markets are crashing yet again. If you look at, this is a 5-year chart of the S&P 500, but if you look here, we are breaking below the lows here set last fall when everyone was afraid of a crash. And, statistically, January and February should be strong months. So everyone's freaking out. So let me get to this. First of all, I'm 100% cash. I don't care if the market goes up. I don't care if the market goes down. I am sitting on the sidelines waiting to see better opportunities. A lot of people forget that, but sometimes the single best trade that you can have is no trade at all. You do not need to trade every single day. I know that your addiction wants it and your need for action and you want to grow your account. I get that. Trust me. But sometimes you just have to take your foot off the pedal and say, you know what? I'm going to sit on the sidelines. So I'm kind of like, watching all of Wall Street burn from the sidelines. I'm playing a fiddle. I'm Jewish Nero, okay? I tweeted this earlier today. I said, buy and hold like attrition warfare is dead. You don't need to suffer 10 to 15% market losses. Screw long-term investors, be a sniper. And I truly believe this. Sadly, buy and hold investors have control of the media. They're the single biggest financial strategy out there because they think that you cannot predict the stock market up or down. So because the stock market usually goes up over the long term, it's better just to, guess what, buy and hold. For me, I think that you can predict where the stock market is going. Maybe not to a T, it's not an exact science, but you can have an idea. After 7 years of a bull market, and when you have, a crash followed by another drop that actually breaks the initial drop, and you can't make higher highs here, guess what? You have lower highs and lower lows. That is not something that you want to buy and hold into. And it disgusts me that there are all these people on TV and financial commentators who basically say, oh, just buy and hold, withstand it. And people are down 5, 10, 15, 20%. And you have hedge funds and mutual funds down 5, 10, 15, 20, 30%. Most of the mutual funds and hedge funds in the world underperform the market. So if the market is down roughly 15% off its highs, if you're only down 10%, you're supposedly, doing very well. You're getting high fives in the office. For me, if I'm down 10%, I'm not giving high fives. I'm not handing out high fives to anybody. I'm disgusted that you think that you can only beat the S&P 500 or the overall markets by a few percent. Let me enlighten you guys. This is my E-Trade performance. Last year, I started an account with 30,000. I didn't do it in January. This negative 10.1% is like some fees or something, inactivity fees. I started February, and you can see I'm making 4%, 30%, 11%, 47%, 42%, 2%. It varies, but pretty much every month is rather positive, and the S&P 500 was flat for the year. So, look at February. A lot of people say, Tim, in a very bullish market, you don't really outperform. But over time, I do. And last year is just an example. Already in 2016, with the major market indices now down 10 or 15% on the year, I'm up roughly 30%. Again, on a small account. But that's the beauty of a small account. You guys, too many of you look at your small account like a huge disadvantage. I can't wait to be a millionaire. I can't wait to be moving, big amounts of money and really growing my accounts. Well, earn it, okay? Don't take your parents' money. Don't take out loans. Earn it. Grow your own accounts. Save money. Do manual labor. My best students, my millionaire students, most of them started with just a few $1,000s to their name. Okay? I'm not saying that it's easy, and nothing in life really that's worth doing is easy, but it is possible if you have the right strategy and ideally you have a mentor. So do not just buy and hold. I am disgusted by people who say that you have to buy and hold through this obvious, terrible chart. And mind you, I could be wrong, okay? We could be bouncing. Maybe the buy and holders are right. Maybe this whole charting and the lower highs and the lower lows, maybe it's just a fake out. Maybe we have a big government intervention coming again. We're going to be more in debt, but they're going to save the stock market. That's possible. But guess what? If it goes back to the highs, you're still only making 10 or 15% that you pretty much lost already. So there's no great rise here. I'll wait until there's a breakout. If it can break the highs, hey, I'll buy the breakout. But as long as we have lower highs and lower lows, I am not buying into this market. And I don't suggest anybody else does either. Because you, with a small account, whether you have 1,000, 2,000, 5,000, 10,000, 50,000, you don't have to go down with the ship. Okay? Most of the people on CNBC, most of these financial talkers, most of these bigwigs who still, if you look at their performance, they're not very proud of that. They might be proud of their power suit and their ties and their connections and their investors, but their shit track record speaks for itself over 5, 10, 15, 20 years. I'm not talking about 1, 2, 3 years. Bull market, newborn babies don't matter to me. I want to see somebody who's able to profit in bull markets and bear markets. And guess what? You're listening to him. I've seen all markets, and I'm not saying I'm all knowing and I'm all wise and I'm the best trader. If you've been a student of mine long enough, you know that I exit trades way too quick. I break my own rules. I'm not very disciplined, and yet somehow I've still turned a few thousand into now over $4 million. So where am I going with this? Number one, do not listen to someone just because they seem professional and they talk professional and they're on TV. Focus on track records. The SEC likes you to believe that past performance is not indicative of future returns. Well, what the fuck is, okay? If you go to a baseball game or a football game, you see the player's stats. Obviously, it can change from year to year, injuries and, new competition. But overall, if you have a very good all-star or a future Hall of Fame, running back, they're probably going to be better than somebody who has no track record or a rookie in the NFL or the major leagues. Track record matters. And that is why I'm so proud of this. And this is just 1 year, okay? And this is a small account. I start small accounts just to show you what you can do with a small account. And I want you to understand by the end of this video that you can trade like a sniper. Remember this. War of attrition. I don't know if you guys know what this is. Let me look up this. Let me get the official definition. This is a military strategy in which a belligerent attempts to win a war by wearing down the enemy to the point of collapse through continuous losses. So this is how most buy and holders think. They think that they're going to win the war eventually, even with these losses, because they're going to wear down the market with their patience. That is the weird analogy here. It doesn't really work. But what I'm saying is be a sniper. Go to all cash. If you're unsure where the market is going, exit. You're in control of your own money. You don't need to just sit there and take losses. Most mutual funds in their charters, in their constitutions, they have to stay invested. Even if they know that there's thermoglobal nuclear war tomorrow, most mutual funds have to go down roughly 65% invested. There's different charters. Some mutual funds are required to invest 50%, some are 100%, but that's stupid. You are not constrained by some stupid rules like that. You can go short. That's how hedge funds develop. They're more nimble than mutual funds. But even if you look at the biggest hedge funds, they're getting crushed right now. For me, the best play is cash. And if people say, hey, Tim, what are you investing in? I say invest in yourself. When the market is like this, guess what? You can take some time off from trading. You don't need action. You don't need to force trades that aren't there. What you can do is study and better understand what a perfect play and what a perfect chart looks like so that you're not even tempted by this. I'm not even really tempted to make any aggressive trades. Sometimes I'm making a trade every now and then, okay? I think I'm, up maybe 1,000 or 2 in the past few weeks, but nothing huge because I'm being very careful and I'm focusing mainly on remembering what the good patterns are. Go watch my How to Make Millions DVD. This weekend, I'm gonna go watch my Penny Stocking Part 2 DVD. It's Valentine's Day. I'm going to spend some time with my fiance, but I'm also going to re-watch my Penny Stocking Part 2 DVD because it has all of the most classic chart patterns that you should be focusing on, not guessing games. No one ever gets rich off guessing games, okay? No one who's going to be happy with their money. If you look at how lotto winners make their money, most lotto winners are very unhappy later in life. They didn't achieve it. They didn't earn their money. So I want you to earn your money through using your brain and intelligence and stretching that muscle that sadly doesn't exist for most people in the stock market because they really don't think that you can guess where the market is going or predict where stocks are going. And I think I've cataloged enough videos and enough DVDs and enough webinars with specific patterns. Go watch my video lesson from yesterday. It's one of my best video lessons People are saying, and I say thank you, but why is it my best? Because I simplified two very great and reliable patterns: dip buying earnings winners and short selling pump and dumps, short selling stocks that do toxic financings. And now these are not typical kinds of patterns for the overall stock market, but with penny stocks, they are possible. And that lies the opportunity. When you have an advantage, when you have an edge, not when you have a guessing game chart. So use this time off to study. Don't feel like you need to trade every day. Get educated, get prepared so that you can be better prepared when the next amazing opportunity comes. Thank you.